JVP stands for Jerusalem Venture Partners. It's a 22-year-old venture capital founded by Erel Margalit, who's now a member of the parliament. We're one of the largest and I would say successful venture capitals in Israel. We've been ranked as one of the top 10 venture capitalists in the world in terms of consistency of performance last year. So we own two incubators, one in Jerusalem and one in Beersheba. Beersheba we do mainly cybersecurity and big data. In Jerusalem we mainly do media, enterprise software and storage. These incubators are part of the National Incubation Program, the Chief Scientist Incubation Program. And once a company graduates the incubation, we invest between $1 million and $1.5 million in a company. And usually they will graduate after 12 to 18 months. When they graduate, we will come as a fund, we'll change our hats and we come in the fund and see, and we invest in the A round and the following round. So this is kind of an early stage vehicle that we manage and it's working very well for us. You need to be all the time with the finger on the pulse of what's happening in the world, what's happening with technology, where the world is going. You need to try to forecast, what the consumer will look like in 3 years, what the enterprise will look like in 4 years, what the need of the storage or enterprise and how the world is changing so quick now, and to build the solutions that will be and the pains that will be emerging in the next short term and medium term. Well, the three things I would say: we look at the team. We want to make sure the team is very savvy in what they do and the market they operate in. They know the competition inside and out, the technology inside and out. They need to be very passionate. This is very important. They need to really want to change the world. They want to change the category that they're operating in. So team is the first thing. Second thing I would say is the market. We want to make sure it's a growing market, it's an interesting market. It's not too crowded in terms of a lot of companies that are already doing that. So we look at the market and see whether it's an interesting one, whether it's a growing one, and whether there's an opportunity to actually to be a substantial company within this market. And the last thing is the product itself. What is the product? What is the competitive edge of the product? What is the technology behind the product? Why is it unique? Why would it beat other competitors? So it's the team, the market, and the product. That's the three things. If you look at any of the successes that we have in any of the IPOs, it usually was a process of a company that identified one thing, but navigated and changed a little bit and was flexible enough to change according to the market needs. So it doesn't necessarily have to be that the first initial idea was actually the one that eventually the company ended up with. Story of failures, again, we have them as well, and in many cases I would say the reason is either the company was too early to the market, so we thought the market would happen in 3 years and it didn't happen at all, or it happened after 5 or 6 years, or that the company wasn't listenative enough to the market. So it may got some feedbacks but didn't address these feedbacks. The market told the company something and said, you're offering this, but we actually prefer it this way. But the company didn't listen and still went this way. And in many cases, this will bring to a failure of the company because it wouldn't be sensitive enough to what the market is telling it.